Hey folks, David Frost, mystrategicforecast.com. Thanks for tuning in for another episode of Common Sense Market Analysis. Today's Tuesday, June 9, 2015, looking at a daily chart of the SPY. And what do we have here? We have what we're going to not necessarily tell you it's a bottoming signal, but it's the beginnings of a bottoming signal. So this is what we call a doji candle. And basically, we, on not exactly the type of volume I would like to see, but we went down and we didn't quite get on the SPY to the 207.68, I think. No, I'm sorry, it was 207. Right, this was 207. We got to a low of 207.69 today, so we came up short of the line, but nevertheless, we reversed. And if you look at the intraday, I'm going to go to the 10-minute first. And, basically what happened was you went down in the morning. And here we are at 10:40, making a low and then a reversal. And you had a nice reversal and then a retrace. And this is where we are. So what that tells you is, let's just look at the hourly. Here's your retrace. So we had a low. And then we rallied up. We went towards, actually, I think at the time we hit the 20-period moving average, and then we retraced. So let's just see, for argument's sake, what that retrace looks like. Rough numbers. Whoops, I can't get it to take. All right, so let's do it from a little up here, and then to here, and you know what? I'm going to put it in correctly because by now you know that I have to. 207.69. Okay, so our retrace was basically 50% of the move. 208.40. We hit a low on this candle of 208.33, and on the next candle 27, and then we finished at where did we finish today? Well, right now we're at 208.60 on the daily chart. Let me get rid of these fib lines. We finished at 208.45. So basically, we retraced half of the low to high today, which is absolutely normal. And what this tells us is and this is a good way to trade right now. If in fact you want to take a trade in the spider or any other index, because they're all going to act the same for the most part. You can take the trade, and this is a hypothetical, meaning during the day today when you saw the reversal, or tomorrow, whatever you like to do, if you take a trade like this, thinking that the market may have made a bottom, the low at 207.69 is your where I'm wrong spot. Very simple stuff, right? Don't make it more complex than it is. So, what to expect going forward is it's not out of the question to see a retrace again from this low to where we are now, or from where we are now to this low. So we could see a retrace of a portion of this move, a third, a half, 2/3, and then trade higher tomorrow or the following day on Thursday. So we'll see how that plays out. But let me just show you something else, because I do my real numbers in the E-mini. This is where the actual calculations come from. Now watch this, right here. What is that? Okay, that is 2070. Our low today was 2068.75. Okay, that's pretty good. So that tells me that on the E-mini, same routine. I know below 2070, there's lower numbers ahead. And there's 2055, 2050, call it 2050, and then even beyond that, we can even go lower. So we don't necessarily want to see the lower prices right now. What we actually want to see is we want to see this market making this higher low. Now watch this, okay? I didn't even notice this till just 2 seconds ago, okay? Now I don't know if this is going to work. Well, you can make a case for that trend line held. Okay, I can make a case that trend line held. And I like third hits of trend lines like this that are equidistant. They tend to bounce. And here's one. It's not equidistant, but it's, you know, it's a trend line. And it was almost, and it bounced. And I'm not saying that that's a good gauge right here. I'm just saying that it's the makings of a low. And that's all we'll say about it right now. Okay? Leave it at that, and we'll move on, and we'll see how the market trades tomorrow. But right now, the bias has to be on the upside because of the way today traded and what I just noticed here, which is this trend line. And you saw that real time, folks. I just noticed it as I was talking about it. So, or as I was talking about the low, it just visually hit me. So when you've been looking at charts for 25 years, and it's more than most and less, you know, than others, but when you've been looking at charts for 25 years, you just tend to see the same thing over and over again, and things stand out to you that they don't stand out to the naked eye, not because I know it better, because I've been looking at it for so long, and when you've been looking at it for so long, you just can't help but notice things that the untrained eye doesn't notice. So here, I'll give you an example. Let me give you, what is the example? Never mind. I can't think of the stock. Pardon me. Forgive me for that. Okay, let's move on, and let's talk about gold. So this is the August contract, and remember last night I put in this line here at 11, it is 85, right? I can't read it off the thing. Yeah, 1185. And we made a run for it this morning, but we didn't get there. So I still think we will. So I'm expecting a little more upside tomorrow. But that doesn't mean I'm taking the trade, and it doesn't mean you should either. It just means I'm expecting it to get to 1185, maybe higher. And if, by the way, if we close above 1185 and begin to trade higher, then I would expect higher prices. But right now, the gold market's been so tough to trade that we're just going to wait for the ideal setup instead of hoping we're right? That's not what this is about. Okay, let's look at the GDX, because I know a lot of folks like the GDX, and I want to just bring your attention to and recap what happened. We had an upsloping trend line that was broken, okay? First it was broken here, and then it was recaptured. And when it was broken here, I had put in these two lines, okay? So these have been here for quite a while. And when we came down, hit this first line again, and it didn't hold, I said we would probably come down to the second line. And that's where we are now. So here's your GDX trade, if you like. The GDX trade is pretty simple. Right now we're at 1877. If you open good tomorrow, or you don't open below, okay, if you do not open below 1867, you can take the trade with a stop out on a daily close below 1867. Now here we go again. This is the ideal scenario. This is where you can take a trade, you know where you're wrong, and your risk is very, very small, and your reward is whatever the upside can give you. So what happens is, let's say you get in the trade, and it begins to move higher. So let's say you're in the money by $1, making it up, okay? You at least put a break-even stop in, or an in-the-money stop, or you trail your stop, or you take some profit on some of the position, and you do a break-even, trailing stop, in-the-money stop, some kind of protection against the remaining portion of your position. This is the way proper money management is done, okay? So what happens is, if I'm in the trade and I'm up, I don't want it to turn into a loser, okay? Remember, our capital is all we have. It's our inventory. If we're out of inventory, we can no longer be in business, okay? It's very simple. It's that simple, okay? So there's your really, really good risk reward. Now, I'm not saying that GDX is going higher. I don't know, because I don't really know what kind of upside is in gold. I think we're going to get to 1185. Do I think we can go higher? Yes, but I don't have the type of trade setup that's telling me this is a trade. So with GDX, you know, with gold, or GDX dependent on gold to a large extent, I'm not saying take the trade. All I'm saying is, if you wanted to be in GDX, that's how you do it, okay? Let's go to oil. Oil was very interesting today. I want to show you something really cool, Okay, oil was up nicely today. It was up, what is it, up $1.80, up about 3%. And let's go to the intraday chart again. And look what happened. So last night we put in the 58.70. Okay, that was a mathematical level for me that was important. Okay, didn't mean we were going to go to 58.70 and pull back. It didn't mean we were going to go to 58.70 and stay there. And it didn't mean we were going to blow right through 58.70. It was an important number that, if dependent on how oil reacted off that number, may have put in a trade for me. And frankly, I didn't see it happen. But here's what happened. Okay, we went to 58.70 and watch this. This 10-minute candle closed at 58.70. The next candle opened at 58.70, traded down a little bit, said no chance, and then we consolidated for 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, 11, 12. Okay, we consolidated for well over 2 hours, okay, or 2 hours, and then we took off to the upside. Now, I wish I saw it, but I didn't see it. So what I mean by that is how it react. What I mean by how it treats or reacts at 58.70. So, for example, let's say that we pierce through 58.70 and put in a doji candle similar to this type of candle here, or even similar to this one here, and then the next candle began to trade down, then I would have suggested to myself that 58.70 was going to be resistance for a while, not necessarily for days or weeks, just a while. Could be half a day, could be an hour, could be 3 days. And what happens is then you're able to take a trade, and the opposite effect that I just explained in the GDX takes hold. And what happens is you would be short the oil market with a stop on a close below whatever that high was of that doji, that hypothetical doji that we just made. So, one of these, okay? So, but that didn't happen. It consolidated, and if I was paying attention, this would have been the trade. Out here, I would have begun to understand that oil was going to trade higher, and I would have said long oil with a close below 58.70, and it would have been that simple. But I didn't see it, and those are the breaks. Okay, let's go to, so what's going forward in oil? I really don't know. Let's go to the daily chart, and, what I can say is I don't have a definitive pattern. That's why I say I don't know. Can we begin to trade higher again towards the top end of the channel? Well, we could, but I just don't have anything definitive telling me one thing or the other is going to happen. But what I do have is I do have a line in the sand right now at 58.70. And while we're a little far away from 58.70 for me to take a trade on that, that is a line in the sand for the time being. You see all this consolidation that happened. Really, 58.70 was in the middle. And that just kind of gives you a clue where I'm coming from. It's not how I calculated it, but that's the result. And that's when I make a calculation and then I put a line in the chart, and the line in the chart lines up with some other indicator or some other reason on the chart to tell me that that line is important, then it's extra important. The probabilities go up significantly that that level is important, and that's pretty much what happened here. Okay, let's go to the bond market, and another interesting day in the bond market. Now, the bond market sold off again, and here's a daily chart, and I'm just going to cut right to the chase. You can go to the intraday chart yourself, or I can do it for you, and we can see that, the bond market's just been weak, and it's been in a persistent downtrend. Now let's go back to the daily, and I want to recap what happened over the last several days, few weeks, and then kind of bring us to where we are. We hit this low, and I didn't take the trade. And if you remember, I told you why I didn't take the trade. Because back here, we came 3 days in a row, we came within shades of this line, and we didn't close, or we didn't touch the line and bounce off of it. And that's really what I was looking for. So then I said, did I miss the trade? And I don't know, I wasn't convinced. And then we came back down to the line, And then I said, I'm not taking the trade. And I was a little upset I didn't take the trade because look what happened. But then we rolled over again. And when we got here, I said, if we come down here again, it's not going to hold because we almost touched it here. I just didn't think it was going to hold. And lo and behold, it didn't hold. And where are we going? How long has this green line been in there? Those of you that have been here for a while know that this line has been in here since we were up here. Okay, and 115.43, I don't know if we get there tomorrow or if we get there at all, but what I do know is if we get there, that's a buy. And what that does is, let's flip over and look what that does to yields just to get the mirror image effect. Okay, and I'm going to give you this picture, and then you'll start to see part of how I derive or I make my analysis using different markets, different charts, the same chart flipped over upside down. This is one that's flipped over upside down. Now watch this. I haven't done this in a few days, so I don't really remember the exact outcome, but let's see what this does. Okay, now where's this high? 30.36. All right, let's get it spot on. 30.36. And this low, I think, is pretty spot on. The low is 16.51, 16.54. So 16.51. All right, so we'll change it. You know I can't help myself. Okay. 25.07. 257 is really what it is. It's 2.57. What we're looking at here is the 10-year yield. 2.57% yield on the 10-year, okay, is a 618 retrace. All right. Now, where does that put us? Okay, so we're at 241 or 242, really rounding up. 242, okay, to 2507, all right, or 257. That's not that far away, okay? Now, let's go back to the TLT for a second and see what we've got, all right? Now, if the yield were to spike up into that 618 retrace, all right, what would happen to this? Would we probably pierce through this line? All right, yeah, we probably would. So you can see where that lines up. Now, why do I think the yield would stop at 257? Because it's a 618 retrace, okay? And I think that when the market begins to correct some, okay, I think we will see lower yields later. So my point is, I don't think this is just going to be a straight shot up in yields and a sell-off in the bond market, as some people have been, you know, the talking heads and whatnot have been saying, only because yields are headed in that direction. But I think they're going to stall out up here and take a breather for a while and just act like normal markets do. So this is a little extended at the moment, and it makes sense that we stop up there. So that's my take in the bond market and the TLT and the yields and the whole 9 yards. Hopefully that's helpful. Let's go over to the dollar. Okay, the dollar had another weak day, and basically, I'm sorry, this is the weekly chart. All right, let's get to the daily chart. All right, so the dollar is still weak. We don't have anything definitive also in the dollar telling us one direction or the other. The problem is we're right in the middle of this trading range here, and until that clears up, there's really nothing to tell me it's headed in one direction or the other. I do think downward pressure will be on the dollar. I don't, just like the bond market, I'm not convinced yet this is the low. We'll see. I could be wrong. That's fine. And if I'm wrong, I'll know when I'm wrong based on what the chart is telling me. Right now, the chart's not telling me anything. It's just more of, if this was a low, I think we would have seen a more powerful move, and I don't think we would have seen kind of the type of action we're seeing now. We'll see. It remains to be seen. I really don't have anything definitive on the dollar, but when I do, you'll know about it just the same time I do. We might as well bring up natural gas because it was up almost another 5% today and right into the 20-period moving average, and I'm pretty sure that's where we said it would go yesterday. Is there more upside? Maybe you could have 3 up days in a row, maybe get up into the $3 area and then stall out, or you can consolidate for a while. But either way, you can't really buy it up here. This was the place to buy it at this doji candle, I guess. But we weren't really watching it back then. I did a couple of times I did an analysis by request, and I guess the request by the member was kind of hinting that he wanted to go long, or hopefully he did go long down here, and that hopefully that was a good trade. But it just wasn't for me at the time, even though this double bottom looked good. And the reason is because I don't watch the natural gas market on an everyday, all-day basis. So I'm not as familiar with, not that you can't chart anything, I can. It's just I tend to trade the same markets, the same stocks over and over again because they're familiar and it's successful, and I don't need to really find other stuff. And the natural gas market could be very, very volatile, and it's also known as the widowmaker, and you can use your imagination on why that is. So it's just not necessarily for me, but that doesn't mean it's not a good market to trade. It is a good market to trade if you like trading the market and you understand it. Anyway, we'll just move on from there, and I'll do any market by request. In fact, speaking of which, before I begin to ramble on too much about nonsense, let's talk about a couple of stocks today, because we bought Delta, right? Okay, let's just bring this one up. So we bought Delta this morning, and let me show you what happened here, okay? This is the 10-minute chart, and we bought Delta down here at about $40. This isn't Delta anymore. What happened there? We bought Delta down here at $40.20. Okay, I'm sorry. Yeah, here at $40.20. Now, let's go back to the daily if I can get there without going back to natural gas. 40.20. Okay, whoop, here we go. 40.20. Okay, and we got the pop. And the reason why we bought the stock down here was not because of the intraday action as much as it was where it was in terms of a retracement. So now I want to show you again from this pivot low, not necessarily from the low all the way down in this area, but from this pivot low, we were coming into a 618 and the 50% retrace right up here. And there was a couple of other factors, including how the stock was reacting, including that I like the transports down here. And let's go and bring up the transports 1 second, because it is relevant. That's not the transports. It is relevant to the bigger picture. So just give me a second. I've got looking on another screen for the generator. Okay. So, I like the transports down here. This is a very important level. We pierced through it a little bit, but it's holding so far. Okay. And, if you go to the daily, or that's a 60. If you go to the daily, you can see where we are in the transports. We bounced off this level. We came down to test it again. We pierced through it. Now we made another low. What happens here is, not all the time, but one of the things that happens here is that the market pierces through the prior low, takes out some stops that are there, and then reverses. And that might have been one of the things that happened today. And you can see in the transports and the intraday that reversal. And then a retrace. Okay, you always get the retrace, right? You start to see how that works. So let's go back to Delta. So there were like 3 or 4 different factors on why I like Delta. And we were fortunate. We're in the money by about 50 cents in Delta. And I'm looking for more upside. Why? Well, obviously I'm looking for more upside because I bought it today. But what we're looking for is the more upside off of this reversal day on volume, right? It wasn't the highest volume day, but it was on volume much higher than the average, okay? If the average volume is about 13 million shares, we did 28 million today, more than double the average volume. This is a reversal candle, double the average volume. Transports are at good support. Intraday reversal on Delta and the transports once again. All those signals point to more upside in the airlines, or at least more upside in Delta and other airlines. They're all going to trade together for the most part. So just to give you a picture on why I bought Delta and what the expectations are in Delta, hopefully that's helpful. We're going to give it a wrap there tonight, folks. I'm David Frost, My Strategic Forecast. Thanks for tuning in. Thanks for being members of My Strategic Forecast and tuning in for another episode of Common Sense Market Analysis.